The idea of a profit and loss statement is there's several components. The first component is the income component. This is where we collect money from sales of our products to various customers, and the money comes into our bank account. Our cost of goods sold makes up those items that we've purchased to on sell. So a retailer who buys in a computer pays for the computer, that's in their cost of goods sold. They then have a markup and they sell it and receive the income. From there, we have our expenses for the business, our telephone, our rent, our electricity, our insurances, our wages, our superannuation. Understanding those expenses allows us then to monitor our business, ensure we're paying the correct amount and generating sufficient profit. And the result is our net profit. So our income, less our cost of goods sold, gives us our gross profit, less our expenses gives us our net profit. So what does the net profit mean to our business? Well, the net profit flows through to allow us to generate cash flow and our balance sheet. So in our balance sheet we have assets. The assets are the things that we actually own. The liabilities on the balance sheet are the things that we actually need to pay. So our assets will comprise our plant and equipment, our bank accounts, the debtors, that is the people that owe us money, and they're split into two. One's current, one's non-current. The current assets are those items that we can generate cash within 12 months. So it'll include things like direct shares, your bank account itself, our debtors who pay us, and our non-current assets is our equipment that we're using to generate the income for our profit and loss. Our liabilities are those things that we've got to pay to people, i.e. our creditors, that's the people that we've got to pay the money to. It could be our bank overdraft that we're utilising to generate income and to generate the business to operate. It could be loans that we've borrowed from the bank. So again, we have current and non-current liabilities. The current liabilities are those liabilities that are accrued or realisable or have to be paid within a 12-month period. The non-current liabilities are those things such as bank loans which help fund it, our business, and then we have our equity. The equity is what it's worth to the actual owner. So most times we say to people in business, your business balance sheet will comprise those items, assets, liabilities, and then what it's worth to you to generate the income to allow you then to take that money out and invest it into things such as properties, your fancy boat, your fancy car. Understanding these particular points is so important for your business success. This is why most businesses fail within the first 5 years, because they do not understand the figures.